Looking at the rand, we've got to the desk this morning and we're looking at a stronger unit against particularly the US dollar. Short while ago, we were trading at 6.79. Earlier, I got a view from George Gleanar's ETM saying the trading range for today is between 6.74 and 6.85. Would you concur with that sentiment?
We certainly would, Bronwyn, but if you just take a step back, I mean, the rand has really benefited yesterday from an upside surprise in GDP data, as well as news that the Walmart deal would go ahead. And because there was so much local data out yesterday, the rand really took direction mostly from that. Looking to today, however, with very little local data out, in fact, we only just have the PMI, the rand is more likely to take its direction from dollar movements. And with the ADP report coming out later this afternoon, that will be quite key. So if we have a situation where the employment data out of the US disappoints and the dollar comes under further selling pressure, we could see the rand move to about 6.74, perhaps as far as 6.70. But conversely, if the news out of the US is much better than expected, then we'd expect the rand to move up to about 6.95.
In early trade, we don't seem to be taking a cue from the Chinese PMI that came out at a 9-month low. Market commentators there pointing to a declining trend in the manufacturing environment in China, which could lead to slower economic growth. The point I'm making here is that ultimately is what is keeping our commodity story buoyant, and that is a key underpin to the local unit.
Absolutely, Bronwyn, and that would be a key risk to the rand's outlook. As it is, we do have a weakening bias for the rand for most of this year. So the fact that there's monetary policy tightening in China and that economy is expected to cool will clearly have a knock-on effect on commodity prices, and that could lead to rand weakness looking further out towards the end of this year, particularly against the dollar. So in the medium term, we'd be looking for the rand to still move to about 7.17, but in the short term, will likely be supported by the fact that the dollar is still under pressure.
Just focusing on the dollar and the US for a moment, we were speaking to Mohammed Nalla from Nedbank Capital this morning, and his view is that QE3 is potentially a big factor for markets going forward. If we see QE3 coming to the fore, that excess liquidity could then come and boost all emerging market currencies across the board. Again, that adage that investors will be looking and searching for yield.
That is certainly a risk factor, but I don't know that the possibility of QE3 is particularly strong at this point. Most Fed officials, most comments made by Fed officials have been rather pointing towards a normalization in policy. So certainly QE3, I think, would catch quite a few market participants on the back foot. It certainly isn't a Standard Bank's view that there's a possibility of QE3 going forward. But certainly if and when that possibility arises, and then clearly one would have to reevaluate the view, but at this point we think that there's a very, very slim possibility of that.
And Nomvuyo, while we're being buffered by the international environment, perhaps let's just throw back to Greece the potential for a second bailout and the fact that that could push the risk on trade even further and bring that dollar rand to that 6.74 level that George was throwing forward to earlier this morning.
Well, absolutely. We've seen the euro strengthen, particularly against the dollar, as news that Greece might, in fact, get a second stance towards this is softening, and that could be a way out for Greece. And we know that the sovereign debt crisis has really hammered the euro recently. However, in the long term, we also see extended euro weakness as crisis. We don't think that it's going to be resolved in the near term. However, if it does, as you mentioned, that could certainly be a catalyst for some rand strength and a move back down to 6.70 level.